Hey guys, it's James, and today I wanted to talk about Nintendo. And over the past year, we have seen a 26% decline in the stock price, but I want to share with you and show you why you might want to invest in this fund in 2022, and I want to show you why 59% of the analysts on Robinhood think you might want to buy this fund, and 23%, whoever hold this fund, 23% think you need to hold this fund. So there's a few articles that I found that spoke about Nintendo. One of them was on NASDAQ.com. It says, is Nintendo stock too cheap to ignore? And in this article, it was highlighting that Nintendo had a few new games that were coming out at the beginning of 2022. Over on Motley Fool, this article was written at the end of Q3 in 2021, but it was also speaking about some of the very similar aspects as the NASDAQ.com article did. One of the reasons why Nintendo has been down, as this article highlights, is that there's been a chip shortage, meaning they cannot produce as much game consoles as they would have liked. So with those two things in mind, if 2022 is the year that Nintendo is able to secure its chips and more chips are being produced, which would lead to more game consoles being produced, 2022 might be the year that Nintendo stock goes back to its high of $81 per share. If we come over here to Robinhood and look at the 5-year graph, we see that Nintendo had reached $81 per share on February 19th, 2021, and then it took a decline down to the price today of $58.10. So let's go ahead and go over to my calculator and take a peek and see what we would have over the next year if we were to analyze the fund and expect it to increase back to the $81 level by the end of 2022. And then we'll go ahead and compare it with a simple Vanguard S&P 500 and see which one you would rather invest in. Let's go to Seeking Alpha and check out some of the data for Nintendo. So the Nintendo share price is sitting at $58.10 today. Its 1-year decline is sitting around 26%. Its dividend yield has been sporadic, but on average, it's between 1 to 3% over the past few years. If we take a look at Nintendo's dividend yield history, we can see on the max selection, it looks like it has been very sporadic over the past 20 years. But if you look at the past 5-year history in 2021, it paid a $2.27 dividend semi-annually when the stock price was sitting from $80 all the way down to $58. And that comes to be about a 2% dividend yield. In 2020, they paid $1.91 with the share price ranging from $49 all the way up to about $78 to $80. 2019 was $1.05 and 2018 was 72 cents. So the range of dividend yield for the past 3 to 4 years has been 1 to 3%. So on our calculator, we will have an input of a 2% dividend yield. Let me share with you my single fund investing calculator. The fund name we're looking at is Nintendo Co. The ticker symbol is NTDOY. It's a stock. Today, the share price is sitting at $58.10. Dividend yield is 2%. Expense ratio is 0. Its dividend frequency has historically been semi-annually, meaning you would get a 58 cents dividend per share that you hold with an annual average dividend of $1.16. And here we have our growth and contribution numbers. We're going to say that we don't add any into Nintendo in the year of 2022, and we're going to put in 39% for an estimated annual growth, and this is taking into account that Nintendo will rise back to its max price of $81 from $58, which comes to be close to about a 39% increase. If we had a $10,000 initial deposit, our Nintendo will have grown within 1 year. $10,000 will grow to about $14,000, and this is with dividends reinvested. If you keep the dividends for yourself, you would have $13,900. And we analyze a bunch of different funds on this calculator. So down here, this is just a fun little number with our estimated dividend yield. For $1,000 a month in annual dividends, we would need $600,000 of Nintendo. let's go over to our fund versus fund investing calculator. We will compare Nintendo with VOO, Vanguard's S&P 500. I already have all of the stats in here. We come down to the growth in contribution with a $10,000 contribution with a estimated 30% annual growth for VOO and 39% for Nintendo. We would have Nintendo outperforming the S&P 500. In 2021 and in 2020, the S&P 500 grew anywhere from 20 to 30%. So this is actually a very high number for the S&P 500. If you take a look at the 1 year growth, it would still outperform if Nintendo did grow 39%. If we were able to get out of the chip shortage and the new games for Nintendo were a hit, then the Nintendo would outperform the S&P 500. It would outperform, you would have $1,000 more after 1 year at the end of 2022 with a $10,000 investment if these expected annual growth rates were true. So let's back off on these growth rates a little bit. Let's say the S&P 500, it has gone on a very bullish run the past 3 years here. It's been anywhere from 20 to 30% the past few years. And since inception, the VOO has averaged about 15% per year. So let's drop this number down to about 20%, and these would be the numbers that you have. Nintendo would still outperform the VOO, but let's say Nintendo did not get all the way back to its 52-year. Let's say Nintendo did not get all the way back to its 52-week high. Let's say it only got back to $60 or $70 per share. Then we would have to take this 39% expected average annual growth rate and bring it down to about 20. And in that case, Nintendo only slightly outperforms the S&P 500. So it all depends on what you expect Nintendo to do. Do you expect them to have a really good game rollout? And do you expect the chip shortage to go away? If so, then you might want to invest in Nintendo in 2022. If you liked that kind of stock analysis with my fund versus fund investing calculator and single fund investing calculator, hit that subscribe button and we will have many more videos like this. Thanks for watching.